Welcome back, dear traders. Here is a fresh review of the US markets from our analysts. As expected, Wall Street was overwhelmed by the doom and gloom on a Tuesday. The major stock indexes traded sluggishly ahead of the crucial report on US inflation. The Dow Jones shed 0.18% yesterday, and the Nasdaq sank 1.19%. The S&P 500 lost 0.42% to trade at 4,122 points. Wall Street indexes traded slightly higher in the New York pre-market. The intraday outlook for the stock indexes is bullish. The S&P 500 is expected to trade in the corridor between 4,140 and 4,280. The S&P 500 closed on a Tuesday with losses for the fourth day in a row. Stocks of microchips manufacturers again come under the spotlight. Micron warned that its quarterly revenue forecast might not match Wall Street's consensus due to snags in supply chains. On a Monday, Nvidia said that the weakness in the game sector could dent revenue in the second quarter. Besides, Novavax shares dropped after the company slashed twice its quarterly revenue forecast because of a low demand for its COVID vaccine. Today, investors were anticipating the US CPI report for July. The red-hot data confirmed the long-awaited decline. The annual rate of the US consumer inflation eased more than expected to 8.5% in July from 9.1% in June, which is the fastest pace in the last 41 years. The consensus had suggested a higher CPI at 8.7%. Energy prices rose by 2.9% last month from the 42-year high at 41.6% in June. The CPI stayed flat in July on a month, following a 1.3% increase a month ago. It's also lower than the expected 0.2% rise. The core CPI also logged zero growth and stayed at 5.9%, whereas analysts had projected a faster climb to 6.1%. Such data gives the market hopes that inflation has eventually topped out in the United States. As for corporate reports, Walt Disney is likely to publish a strong report on its corporate earnings. Elon Musk sold 7.92 million Tesla shares worth $6.9 billion, according to the documents filed to the Securities and Exchange Commission. The sale was the condition for the Twitter purchase deal. Coinbase stock slumped 6.1% after the company reported bigger than expected quarterly losses. The stocks of the companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon and Meta traded higher. Following the red-hot CPI report, the market could develop a rapid rally today. The inflation data dealt a blow to the US dollar. Its index stumbled by 1%, hitting 205 points. The intraday corridor for the index is seen between 104.30 and 105.50. The slowdown in consumer inflation immediately revived investors' faith in a soft monetary tightening by the US Fed. On the other hand, this is just the first sign of easing inflation, but it does not prove that the Fed's battle against soaring inflation is over. Still, inflationary pressure remains high. Earlier, Fed officials mentioned that the CPI should decline steadily for a few months straight before the central bank gives up the idea of aggressive rate hikes. In this context, the market reckons that the Federal Reserve will raise the official funds rate by 50 basis points at the next policy meeting. The geopolitical jitters that feed the US dollar have not faded away. Thus, the US dollar index will hardly move away from its multi-year highs. The USD CAD pair is trading in the loonies' favor with a amid the greenback softness. The currency pair has gained 0.5%, and the intraday corridor for the pair is defined between 1.2760 and 1.2850. The catalyst for the loonie strength is the fresh inflation data from the United States. Benchmark oil grades are losing ground again. Oil prices dropped in the light of the news that Russian Transneft would resume the oil flow via the Druzhba pipeline later today. In response, futures on a Brent crude fell 0.97% to trade at $95.05 a barrel. WTI dipped 0.55% to trade at $89.99 a barrel. Importantly, analysts at the Citigroup predicted that oil prices might plunge to $65 a barrel by the year end, on condition the global economy is hurt by a recession. Curiously, even without a recession, Citigroup expects oil prices to decline to $85 a barrel. Having slumped on a Tuesday, Bitcoin is unwilling to sink below 23,000 today, having rebounded off from 22,600. The token traded at around 23,000 before the publication of the CPI report. It jumped 4% after the data. The crypto was trading at about 24,100 at the moment of recording this video. Nuri GmbH is another crypto exchange to declare bankruptcy. The company, founded in 2015, has filed for an insolvency with the Berlin court. This drastic move was caused by massive sell-offs in the crypto market. Celsius bankruptcy and uncertainty across global financial markets. The company claimed that its clients would have access to their deposits. Yesterday, the U.S. Treasury Department imposed sanctions on a crypto mixed Tornado Cash for its alleged involvement in money laundering. The next day, an anonymous user continued sending small amounts of Ethereum to the public addresses of well-known people. Today, digital assets like conventional lending instruments were sensitive to the U.S. inflation data. Bearing in mind the opposite correlation to the US dollar index and the direct correlation to the Nasdaq, Bitcoin could develop a rally, pushing altcoins up. Support and resistance levels for Bitcoin remain the same, $24,600 and $25,200. Otherwise, the crypto might reverse towards $23,500. And that's all for today. We hope that our review will help you select a reasonable trading strategy. See you online tomorrow.